Hey everyone, and welcome. Today, we're diving into something that's frankly a revolutionary way to read the market. It's a method that promises to show you what's really going on behind those price charts, giving you a totally new way of looking at market movements. So let me ask you something right off the bat. Take a look at your trading screen. All those charts you rely on day in and day out, what if they're only telling you like half the story? I mean, think about it. Candlestick charts are amazing, right? We all use them, they show us price action, but they can also hide the real narrative, the story playing out just beneath the surface. And that story, well, it's being written by the institutional players, the so-called big money. All right, so let's start peeling back the layers on this hidden story. Let's really dig into what our traditional charts might be missing. And this really gets to the heart of the problem. Candlesticks, they give you a chapter. But to trade really effectively, you kind of need the whole book, don't you? It's all about moving from just a piece of the story to the bigger, more complete picture that something like market profile theory can give you. And if we want that bigger picture, there is one group we absolutely have to follow. You've heard the term, the smart money. This is where all the real clues are hiding. The key idea here is something called institutional accumulation. Now, that sounds a bit fancy, but all it means is that these large funds and banks, they're quietly buying or selling, building up their positions when the market looks like it's doing, well, nothing at all. They work in the quiet moments, getting ready for the noise. Okay, but that's the million-dollar question, isn't it? If this is all happening quietly, behind the scenes, how on earth is a regular trader supposed to spot it before the big move has already happened? Well, the answer is actually found in a really powerful theory from Market Profile that explains the market's natural rhythm. You can think of it like a constant dance between two states, balance and imbalance. Everything, and I mean everything, kicks off with a state of balance. This is the foundation where all the major markets...
Every day, traders make decisions based on red and green candles. But what if those candles are only showing you half the story?
Human traders need 200 to 500 milliseconds to process information and react to market changes.
Trading algorithms react in microseconds, literally 1,000 times faster than human thought.
By the time you see a price move on traditional charts, algorithms have already positioned themselves.
Order flow reveals institutional positioning before expiry events, seeing the game within the game.
Weekly expiries create massive position unwinding. Traditional analysis misses these derivative-specific forces.
Stop reacting to candles. Start reading institutional intent. Join the e-course now. 4,909 for lifetime access.
In Indian markets, derivatives volume is 10 times larger than cash. Most market activity is invisible to traditional analysis.
4% of traders lose, not because they aren't smart, but because they chase candles and ignore what institutions are actually doing.
Our 12-video e-course reveals how markets actually move through order flow and market profile. See the forces behind price, not just price itself. Every price move is just the surface. Dive into demand and supply if you want the truth.
Good evening, everyone. Good evening, all. A quick sound check. Am I audible? Great. So we are headed towards the end of the October series. We have the expiry tomorrow. So I have the Nifty futures profile chart on screen, and we have it right from the start of this series. We had the expiry on 30th, where we had identified the rollover point as 24774. So you can see how we formed a base there, and from there, right on the first day of the new series, we got an extension handle and an initiative buying tail. So we knew that the buyers were taking it higher, and for the first part of the month we did probe higher. We went on to hit this 25452, which was a monthly VPOC. From there, we got this retracement on the 14th. So this was an important pullback low, which we did. Why? Because it tested the series VWAP. So whenever you are having a trending move on any time frame, the VWAP of that becomes an important reference. So that got tested on 14th and we closed above it. So if the sellers had to continue, we had to stay below this VWAP, which was not the case. So I'll just make a quick view of what we did from the 15th, because what we did today was similar to what happened on 14th and 15th. So 14th, we got an initiative selling tail and we made a normal variation profile to the downside. But yes, we got similar lows, which was showing exhaustion on the downside. We tested this series VWAP, the orange colored line. So in this, we have the October series VWAP, which is from 1st of October, which got tested. And then the swing low of 30th September was just right there. So when we are taking support at these, and these anchored VWAPs are not intraday references. They are references which you will have to break and close the day and remain below or above it for at least couple of sessions. So this was the first time this got tested. And what we saw on 15th was a higher open above this VWAP and POC. Because this was a seller dominated day and we had an initiative selling tail, this VWAP was very important, 25240. So we opened above that and we left an A period buying tail. So this was telling us that these sellers are no longer there and the buyers have come back. And from there, we continued to probe higher. We formed higher value on the daily time frame. You can see how we continued in the Diwali week, which was last week. We formed this 2-day balance. This includes the Mahurat day trading because we were completely in Monday's range. And then what happened was we got this unexpected big gap up on 23rd, which was last Thursday. This was a news-based gap up which did not have much of a relevance. So hence what happened was the buyers, we did have this initiative buying tail here, but the buyers were not able to extend any further. And this failed move by the buyer, this failed range extension was a clear indication that the buyers are no longer having control, in the sense they are not able to make the range extension higher. So this got in sellers in the tape, and here we got some good selling coming in and we started this probe lower. This was a failed auction 26173 and we completed the 1 ATR on the same day. And the 2 ATR from this failed auction was at 25793. So what we did on Friday, the neutral extreme did not give a follow-up, but the open auction, what it showed us was it could not take off this extension handle at 26002. We made a high just below 26,000 and again we left this selling tail. And once we broke below previous lows, the neutral extreme did give a follow through and we made a trending move lower. We left this pullback high in G, which was right at the scene of crime, 25962. And then we made this extension lower. It was looking as if it would be a trend day down. But what happened then was we hit this VPOC of 25750 and the auction stalled right at the VWAP of that day. So these were all buyer dominated profiles. So the VWAP of this was an important reference. So this low happened in the JTPO. J we consider to be cousin of C, and C side we know is famous for giving us false moves. So when this happened in the J and we did not get any follow up in the K, L and M, it was very clear that the sellers are now booking out. And moreover, it had hit an important objective. The FA also hit the 2 ATR objective on the downside. So what we saw into the close was a close above that, right at that 2 ATR, above the 2 ATR, which was at 25793. So that was more giving us the cue that the FA has finished its objective and now the sellers are no longer in the tape. And more confirmation came today. It was similar to what we saw on 15th of October, where we saw a open above previous day's VWAP. Because this was a sell side dominated profile, the VWAP was an important reference. The POC also was aligned right there, but you can see how we not only opened higher, but we left another initiative buying tail. So what we saw in the Nifty futures today at the open was an open auction in range but a bullish start, because we were above this VWAP and POC, and then we took off this scene of crime 25962, and you can see how we got the POC of the first 30 minutes right at that point. So that level was showing us change of polarity. Hence we went on to probe higher. We took off this extension handle. Above this extension handle, this halfback was our reference. This halfback along with this neutral extreme VWAP of 26085. So what we did was we went on to tag this halfback, but the auction stalled there. So it did not find much demand above this level, 26056 level, and hence we saw this drop back, but this drop again held this value area high. 25960 was the support which was given in the trading room also. VLDV right at the open, Shai gave us that reference, because once we got above this value, in market profile we trade value and we don't trade price. So because we got above this value, we were looking for upside moves. And in this move lower, when this got rejected, we knew that the seller were not able to do enough. And that is the reason we have closed today as a P-shaped profile right around the POC of 26,020. So what is in store for tomorrow? So looking at just the profile chart, I'll come to the order flow chart in a bit. Looking at just the profile chart, what have we done? We have formed a well-balanced P-shaped profile on the daily. So a P-shaped profile gives you a nice value area, because what happens after the initial move, auction settles down into a narrow range. So this value area would be the focus at the open tomorrow. And inside the value area, the POC would be the opening reference. Above the POC will be bullish, below the POC will be bearish, and then we will look at cues in order flow of what the buyer is able to do at this value area high, or what the seller is able to do at this value area low. So we will need to find IB signals here for a continuation on the upside, because we have an initiative buying tail today. But on the downside, we will need to see IS over here and then break of this buying tail for a test of this VPOC and VWAP on the downside. So this is how we are placed for tomorrow, and I'll come to the other references and other tools which we will have to follow. So let's now have a look at the order flow, the 30-minute order flow, and we will need to be careful when we are looking at the COT, because we are nearing expiry, because we had huge, I think minus 12,000 10 bar COT at close on Friday, and some of them were looking at that as a very bearish signal, but that was not the case. October has been a trend up profile. We have seen the base at 24774. From there we have come a huge way up to 26173. So when you have a big 1400 point move, so you will have to see some profit booking, and you cannot just rely on some small sell signals to assume that the trend has reversed. So what did we do? I'll just quickly go back to 23rd. This is where we had that. We'll just do a quick review of the order flow. This is where that failed move of the buyer came, where he made an attempt to extend the initial balance high but failed. We got back into the initial balance, and then we broke below this buying tail, and this got buyers. So what we saw, that 12,010 bar caught was mainly positions which were being covered in the month of October. So I was talking about the base being at 24,774. So if big players have carried their positions, they will still be in profit if they are booking at the highs which we saw on Friday. So that caught was more of profit booking and closure of positions, because in the November series we did not see any red caught. So that was telling us that it is only the uh, positions which are being closed, and they were mainly long positions which were being closed, which is why the caught was red. So that is the reason we will also have to keep the November order flow chart open tomorrow and not go by just what we see in the October series, because most of them could be rolls, and especially the big numbers. So we will have to tally them in the both the series and then accordingly form the view whether it's a new player or whether it's an old player, whether it's a roll or whether it is responsive business. So from this high we did come lower, and here you see you got this IS30 which was confirming that the sellers were in control. We had some good selling over here, and then we got this another big IS30 in the afternoon, but this IS30 did not get triggered. You can see how we are getting 4 rows of zeros on the sell side at the lows of this IS30. Yes, we did make a look down below these lows, but you can see we hardly have any volumes, and immediately we got back. So this itself, the POC of this IS30 being breached into the close, was a sign that the downside looks done. And today's open, you can see we not only opened above this VWAP in the Nifty futures, but so easily we got back above this IS30 high and this scene of crime at 25926, and we formed the base right there as I was mentioning, and you can see here you are seeing more greens. So the order flow was also very clearly telling us that the PLR was to the upside. Yes, we did make the typical seaside a marginal seaside, and we had hit that objective of 26056, and you can see how we had got trifecta of reds here. So it was very clear that the buyers were not adding up here, hence we got this retracement to VWAP. At the VWAP we got zeros on the sell side. This is what caused this new highs in the F, but again there was more supply here than demand. You can see we have got a zero at the top, two aggressive reds. So hence we got a swipe back, we made a break below VWAP, and then we remained in this range. Afternoon we did break below this lows, and you can see where we have taken support. This VWAP of the A period is where we took support, and the entry into previous value got rejected. Hence we got back and closed at around the POC 26025. So even in the order flow it was very clear today that the sellers were not adding after the move which we saw last Thursday and Friday. So what are the other charts we need to look out for, especially for tomorrow's expiry? This is the 3-window mode chart of the Nifty futures line and the call and the put. So because I'll change this to 25,800 call so that it will be slightly in the money. So you can see today what we did was we formed this micro balance, and we made an attempt to get out of this micro balance which did not succeed. So once we got back into the micro balance, we did completed the 80% rule in this micro balance, and then this micro balance was being formed again. We saw a breakout, but again it got rejected, got back into the micro balance, but here we have this IB3 signal which held. So for now at the close it looks as if it is breaking above this micro balance. So with this as our reference, we can look for the target as per this MB breakout. So even in the call you can see how the micro balance gave us a trade. We got an IB signal at the break of this, but then immediately we got this IS and we got back into this micro balance. So this was a very good signal of cutting down on the long side and playing out for the reverse 80% rule in the micro balance. So and then again we got an IS3 here. So it was clear that you could go on to break this micro balance, and once we broke this micro balance, this was of 40 points. 228 was the low of this micro balance. The low which we made here was right exactly 40 points on the downside. I think 178 was the low which we made here, and the auction stalled there. It did not give us any more downside. So this is how you can make use of these micro balances and trade them. Even on the put, you can see this micro balance breakout failed, and once we got back into this micro balance with an IB signal, it gave us the 80% rule. We went on to hit the highs of this micro balance. So this is how you can use this 3-window mode, the line charts, and more importantly, see where we are forming micro balances and trade when we move away from the micro balance. That way you will also be in sync with the auction, and you will know when it is in range and when you can expect a directional move. So coming to the next chart, which is the volume X and the spectrum chart. So at the open, we have already seen the open type and the order flow, and you can see how this volume X also was showing us demand greater than supply right from open and into the uh, first hour and further. So till that F period where we made those new highs, you can see how this kept swiping. And the put, although was parallel, but it was always below this call. And this was the time where we made those new highs and it got rejected, where the put spiked. And for the first time in the day, it went back up, went above the call. And since then, you can see how it has been interchanging. So this is what the auction behavior gets explained by this tool. Till this was happening, we were bullish, we were looking for long side opportunities in the call. But once this happened, we got one trade in the put long, but then we knew when it consecutively it was crisscrossing each other, we knew now that the market was in a range, and hence we got that P-shaped profile, and even the sellers were not able to take off the A period singles, and we closed right in the middle at the POC where both the buyers and the sellers were in agreement. So even the spectrum, you can see how we saw the MVIS inventory on the upside getting adjusted continuously for the first half. But then after this 12 o'clock, you can see it is a flat line. So this is the spectrum range for tomorrow. 25,900 is the lower range. 26,100 is the upper range. And in spot, this is based on spot. So it is important to recall that 26,104 was the failed auction in spot we got last week. So that will be one important reference for tomorrow's expiry. And the gamma zero level is at 26,000. So I'll come to the gamma exposure chart. And what we have done is we've closed as a short gamma market. So very likely that the 26,000 call and put is being targeted by the writers. And we will have to keep an eye out on that for tomorrow and see how that is, if that is adding up OI or it is reducing OI. So coming to the another important 2-window chart, which is a must for expiry days. We have the gamma density chart on the left and the gamma exposure on the right. So you can see how the gamma density chart is pointing towards 26,000, and the convexity is pointing toward 26,000, and even the density is right there. So when both of them are pointing to the same level and these curves keeps getting steeper and steeper, you know that the pin effect could be in play. So 26,000 for now seems to be the reference for tomorrow's expiry. But then what is the gamma exposure showing us? You can see gamma exposure is not that clear. You've got one peak at 26,000. You've got another peak at 25,900. And both of these are short gamma. But we also have another small peak. These two are bigger peaks. Both of them are short gamma. And we have one smaller long gamma market here at 26,100. So we will have to see how this gamma exposure works out tomorrow. And for this, we have another 2-window mode chart where you have the gamma exposure at start on the left and the latest one on the right. So how that will help you is that as with regard to the open, what is the option OI showing us? what is changing hands, whether it is short gamma, whether it is long gamma. If this short gamma of 26,000 keeps adding in and it keeps going higher, and these peaks get merged into this, you know that 26,000 will be the chosen price. Until afternoon we could have the 26,000 straddle, keep falling, making lower lows, and then maybe in the afternoon we can have a move away. But for now the auction is not decided. We have two peaks, so we will have to see which of this peak. 26,000 is definitely got the higher level. We'll have to see how this continues for tomorrow. Especially for tomorrow, it will be very important because the expiry will be tomorrow, and we can see live on this chart how the inventory is changing hands and what is happening latest in the open interest side. So I was talking about the how you can compare the gamma exposure from the open till the current time. So on the left, what I have is the gamma exposure chart of open. So here you can see how it was a long gamma market at 26,000. We also had long gamma at 25,900. And why was this long gamma? Because spot was below 25,800. So this was telling us that the 26,000 put and 25,900 put were long. So, but then the higher open caused this to change. And you can see how we had these three peaks, which out of two were long gamma, and this 25,800 was short gamma, which is where the spot was closing on Friday. But then the things kept changing today. We kept seeing you can see how in the A period itself, the long gamma of 26,000 changed to short gamma. Same thing with 25,900. So it very easily had led to these guys coming out, and that is the reason we got a good move in the 25,900 call, and also to some extent in the 26,000 call also at the open. And but then what happened after this short gamma, you know that the market is now consolidating, and after that point of time we were mainly short gamma for most part of the day. And now that is the reason we will have to look out at this gamma exposure chart tomorrow and see if this peaks continue to be different or they merge into one. If they merge into one at 26,000, and then we have the gamma density and gamma convexity also pointing towards 26,000, then you will know that 26,000 would be the chosen level for tomorrow's close. If not, you will have to go by this, and whatever the latest data tells us, we will have to, as per that, we will have to be ready for the bias. So this is as far as the Nifty is concerned, and this is as far as what we are looking at for tomorrow's expiry. I'll just quickly take it away to the Bank Nifty so that we can have a quick look, because we also have the Bank Nifty expiry tomorrow. So we can have a quick look at what the Bank Nifty is looking like. So I have the market profile chart of Bank Nifty futures. Same thing, although we did not get a failed auction in Bank Nifty last week, it was still a neutral extreme profile which got rejected at these new highs, and the POC shifted to the top. So shifting of the POC is a very important concept in market profile, and this is on all time frames, be it the shortest and be it on the daily or the even the monthly time frame, weekly and monthly. So when this POC shifted on the top, the order flow gave us clear signals that the upside is done, and now you can look for a retracement. How we got good IS30 signal right there, and that IS30 signal went on to give us this big dip, and we went on to make these lows on Friday. This was a triple distribution trend day down what we were making, but then again what we saw on Friday was the POC shifting to the lows, and we had hit the 3IB objective of the day, and then we had tested this anchored VWAP, and we were very close to this HVN, which was an important support. So multiple supports and making poor lows. And again, I not to forget that this was done in the J period. So all this was pointing that the sellers were now booking profits. Although the closing POC was little higher at 57,700, even this HVN was where the POC showed up when the fall stalled, when we completed the 3IB mark. So it was a very important cue that if you are short in Bank Nifty based on the neutral extreme and the subsequent follow through, you need to book profits at this zone. And that is the reason today we opened. It was not a surprise that we opened higher, not exactly gap up, but we were above the VWAP. And you can see how we rejected this VWAP and went higher. We tested this VWAP after open. You can say this was kind of an open rejection reverse where we tested the VWAP, did not get any supply, and this was a trend day VWAP. This was a triple distribution trend down profile. And when that is not holding, you know that the buyers will come back. Same thing how the buyers failed here and the sellers took over. The opposite happened today when the auction tested the trend day VWAP, did not get any supply, and it zoomed back on the upside. It went on to take off this extension handle 57980, sorry, and then we went on to get above the 58251 level, which was mentioned in the business area and is an important reference even for tomorrow. We tag this halfback of the neutral extreme profile, but like in Nifty, we did not get much demand at this point. So this neutral extreme VWAP of 58339 will still be a reference for tomorrow's expiry. And if we are able to take that out, then we are all set to tag this VPOC of 58528. On the downside, we have left this buying tail. You can see how market profile will always show us change of polarity. This was an extension handle on Friday, which is where we got the initiative buying tail today, and the lows of I also held right there. So this will be our support for tomorrow. So if as long as this is holding, we can expect a test of this neutral extreme VWAP, and above this the VPOC of 58528, and then it will not at all be a surprise if we go on to make new all-time highs in Bank Nifty again tomorrow. So I'll just have a quick look at the order flow chart of Bank Nifty, the 30-minute order flow chart, and I'll take you back to the day where we made those new highs. And you can see this was the place. This is the 30-minute order flow, and this was the place where the buyers were struggling to hold above the initial balance high. And once we got this IS30, and this was right at the VWAP, this activation was right below VWAP. And once this got activated with a stop loss of 58555, you can see how beautifully it gave us multiple targets on the downside. So the POC shifting to the top and IS30 signal gave us a huge move downside. Again, on Friday, we stalled at this POC. We got rejected from this 58120 level. We left a selling tail right at that level. 58116 was the high of B on Friday. That means the sellers were still holding this auction, and we went on to make these new lows. And here, similar to Nifty, we got another IS30, but this IS30 did not get activated. In fact, we closed right around this IS30 high. You can see the pullback high at the close was right there. And today what we saw, it was showing us so beautifully that the change of polarities come into play. The low of Bank Nifty futures today was exactly this number. And once you are not getting any supply over there, you know that the seller, this IS signal is no longer valid. This is cancelled out, and you need to have a fresh bias. And we went on to move higher. We took off that 58116 reference, the selling tail from Thursday, and we hit that 58251 level. And when we hit that 58251 level, you can see how we were having more of supply being more than the demand. That is the reason we got this dip. We did get this IS30 bit. This never got triggered because we got above this before breaking below this. So this was not at all a setup, because before activation itself this got negated. And this low of 57980, you can see how exactly the order flow showed us. The VWAP of the ATPO was also there, and even the lows of the B. And this is what we have done. We have taken support at that extension handle of Friday, and we have gone on to close around the highs in Bank Nifty. So you can see how this has been a very bullish close. So as long as this is holding, we can look for a probe above 58339 tomorrow and a tag of that VPOC of 58528. So a quick So this is the similar 3-window mode of the Bank Nifty futures, the call and the put, where we can watch the micro balances happening, and we look for a micro balance to give us a break. So I'll just zoom into this micro balance which we got in the call. So you can see how this gave us a breakout. It came back in, it took support at the POC and the VWAP. And then again, it gave a fresh breakout. And this breakout is continued higher and it's closed in an IB3. So this is how you can combine our tools and features and see how far the micro balance is in play and when it actually gets negated. So we have a similar gamma density and gamma exposure chart in Bank Nifty. Although the volumes in options are less for most part of the series, tomorrow being the settlement, we can, if for people who are trading Bank Nifty, can keep a eye open on this chart. So here you can see the density and convexity both have slightly different peaks, and the convexity is pointing to 58190, which is the weekly POC in spot from last week, and which is where I think we have closed also around the same level. And the density is pointing to 58100. Whereas if you see the gamma exposure chart, again you see one big peak short gamma at 58,000, but you also have long gamma at 58,500. And same thing we are seeing, we are not seeing one single peak, we have got one peak and then there are two more peaks. So gamma exposure even in Bank Nifty is suggesting that there is the closing price for tomorrow's expiry is still not settled, and we will have to have this chart open handy tomorrow live and see if they are changing hands. So I just wanted another quick look at this line chart of the 25,900 call, which I was mentioning how it gave us a good up move. And you can see how it got above previous days VWAP, it continued to probe higher. We got this IB plus IB signal and we went on to make these new highs. And once we started to form this micro balance, it was telling us that the bullishness is over and now we need to not be too bullish or look for directional moves. You can see this, what happened here was a breakout from this call, but then again we broke back into the MB with this IS. So this is a very good setup where it is telling you that the market is in a range and you can look to trade the range. You get signals in the order flow, you make use of this, you sell below this, this is your stop loss and this is your target. You can see how beautifully we went on to hit this target. And then again later in the day when we broke this micro balance low, it went on to give us this one target of this micro balance on the downside. So these are live example latest trades which have happened, and this is why I wanted to show this chart, and this is what we need to do. We need to make use of these, and you can see this big balance, micro balance at close on Friday gave us a breakout above this and it continued the up move. It was already giving signs that it wants to break out from this, and we have closed at the upper end of this micro balance. So if we stay above this 160 level tomorrow at open, then we can look for a more upside in this call.